when you think about making money, so you think about, I need to do a startup. I need to either like be a senior executive in one of the companies, or I need to invest in the stock exchange. But people are building beautiful businesses. You see businesses that one person built that is doing security services. Another is doing consumable healthcare products, simple like gloves and things like that. Businesses that generates for these people $1, 2, 3 millions of net profit every year. And they worth at least 4, 5, 6, and sometimes more than that times that profit. So these people are the definition of success, but outside the glamorous arenas that we are familiar with, high tech, financial sector, etc. And you find that there are so many of those, and you just see these entrepreneurs with 10 fingers. They built these businesses, no VCs, no investors, no board, just fighting a day after another to build it.
Welcome to the Ageas podcast. Buckle up. This episode is brought to you by Better Weight for Life, transformational weight loss aid, led by U.S. board-certified physicians, providing access to GLP-1 medications like Wegovy and Zepbound that are proven to help you lose weight and keep it off. This episode is brought to you by CardsBiz, a business card too good to give away.
Hello, Guy.
Hey, Guy, great to see you. How are you doing?
I'm good. So we had so many technical difficulties. So hopefully this is gonna last. Okay, but we have to. But I have to point out: matching T-shirt, matching beard, matching haircut. So I already know it's gonna work. It's gonna be a great conversation. Just based on that. So Guy, you bring something very unique on the table, because in this podcast, usually we interview entrepreneurs or investors, and you have a very, very interesting background, but you have a proven record, not only being both, because there are entrepreneurs who are investors and investors are entrepreneurs, but being an entrepreneur and an investor at the same time. So so that's our big teaser for this episode. And so for people who don't know who Guy is, how do you introduce yourself?
So I have so many hats. I'm trying to figure out which one is where to start from and like by what, how to rate them. But I'm Guy. I'm father of 2 beautiful kids, a husband to Rachel. And I've been for many years, I've been working in finance for a couple of years, both in Barclays and Wells Fargo as an investment banker. And I've been working on, the biggest deals in the market in Israel, abroad. And one thing I learned is that, I was sitting down with these CEOs, chairmen of companies, investors, and, all of them had huge success in their life. But then you realize that not all of them are the brightest or the smartest. Some of them have just a lot of grit. Some of them are just persistent. Some of them are just like fighters. And this is where I realized that entrepreneurship was like a big thing for me back then. But this is where I realized that, maybe you don't need to be, Albert Einstein in order to be an entrepreneur. You need to be more of, a Golani soldier mentality in order to win. And this is where I decided to start.
Yeah, interesting. And I smile as you say this, because personally, I think my biggest entrepreneurial mistakes is when I was too small. I was too smart for my own good, and sometimes being smart is not wise. Maybe that's a better way to say it. Maybe sometimes smart is not being wise. It's okay. So it's funny. Yeah. So you kind of alluded that you started from a financial investment banking background before you kind of stepped into entrepreneurial background. So how about you take us a little more details of that part of your life, and what exactly made you jump into the entrepreneurial track, and how exactly did you do that?
So I was an analyst at Barclays and then grew to be a VP investment banking at Wells Fargo, and you work on deals that are, mega deals in the Israeli market. And so, financing of oil and gas fields. All right. So billions of dollars you're talking about here. A opportunities and IPOs of Israeli companies on NASDAQ. And you work your ass off. So this is it's the industry that people are working the hardest. So pulling all-nighters, weekends, etc. That's part of the job. And but then you realize at some point that you do all that work and you do it for somebody else. And that was, aha moment. I want to put this effort for myself.
What year was that?
So we're talking about, so I was starting 2010 until 2016 doing investment banking. And I started thinking about, entrepreneurship. So in Israel, obviously back then, so we're talking about 2014, back then, entrepreneur, what do you mean? Startups.
Startup,
So
internet, something.
exactly. Back then, so there was the apps. This is where, the movie, the ways kind of were really big. And this is where the seeds of, the Monday were built and others as well. Fast was, growing extremely fast. So back then, living in Tel Aviv, every, lunch, coffee you're having with a friend or in an introduction meeting to somebody else, like, all right, what company are we going to start? Coming from investment banking, one of the biggest learnings from that is that you learn to appreciate businesses. You learn how to analyze businesses. The downside of it is that you start looking at businesses like startups that are, from zero trying to get to the moon. You become very skeptical.
Because there's no numbers, there's hope. Like
Exactly.
all the cells in the Excel are hope equal
I
$1
could
billion.
put it better in words.
That's it. That's how you do. That's as somebody who personally raised money for venture capital, and they say like day one when I have a person says fill in an Excel, I go no problem. Hope equal $1 billion. No problem.
So I couldn't put it in better words than what you just did. And, eventually startups, it's about a dream that then
Yeah.
hopefully materialize. But I became so realistic and so pessimistic
Because
because I
of
came from the business side and, I want to see something tangible. So it was harder for me. And I can tell of a few startup entrepreneurs that I'm so grateful that they didn't take my advice back then and had a huge success since then.
yeah.
But for myself, I realized that probably, I became a serial killer of startup ideas. So I realized that that's probably not for me. And then a friend of mine who went to school abroad sent me a case study about this company that two Stanford graduates, they went out, they raised some capital from their professor and a couple of other investors. And then they went out and found this business called Road Rescue, which is you get stuck with your car, they come and help you. And they bought it for about, let's say, $6 million in around 1996. That company became one of probably the largest insurer of tech equipment in the world, selling in the billions today. So no high tech, no VCs. And this is where the first time I learned about search funds. This is the first time I learned about ETA, entrepreneurship through acquisition. And that was for me the aha moment. I stayed up all night reading that case study again and again. And I was super lucky to have meeting with these entrepreneurs later in my career, and even luckier to have some of their investors investing also with me later on. Yeah. So this is how I came about becoming.
Okay. So we're talking about 2016, right? More or less 2016. Okay. So you said like want to do entrepreneurship, but I don't want to do this hope and pray and let's make angels fly route. Which again, it's amazing if it works, right? Don't knock it, right? If you make the dream come true, amazing. But you want something, and then you said like, hey, there's another possibility: is search fund, blank check funds, right? Like other names for it. And also, we have to say this is not something that happened in Israel before, right? For all its entrepreneurial in high tech, there's not a lot of financial entrepreneurship here in that sense. So okay, but it's still a pretty abstract idea, right? So like, how did you take that abstract idea and kind of build it into reality?
So the traditional search for an entrepreneur, usually what happens, so they study about it in business school. So today, all business schools abroad are teaching it. And I had the privilege of just concluding the first teaching and concluding the first ETA course in Israel.
Oh,
Life University. Yeah. And usually what happens, so that entrepreneur wants to do it, they study about it. Usually their professor is also an investor and obviously knows the community. So he opens the first door for you. He said, all right, I know Hagai. I was teaching him. I know he has the right qualities to succeed. I'm going to invest in Hagai. And I'm going to give him the opportunity to succeed. And then he can, start his own business. So this is how I came about becoming And I'm also going to introduce them to other friends of mine who are search fund investors. So this
Basically,
is
welcome him to the club. So it's a club of people that understand the mechanics, understand how to evaluate it, and kind of co-invest in this side.
exactly. Think about VCs 30 years ago. So if I would want to start a startup, so I would go to you and then you say, all right, I have a couple of friends who invest, angel investors, VCs, etc. I can introduce you to them. Okay, so that's the same exact thing in search funds. So unfortunately, I did my MBA here in Israel. So I didn't have that professor. So there was another wall I had to break in my journey. And I started looking and reading everything I could find online on search funds. And I found that a business school in Barcelona called IESC is starting to do the research on search funds outside of the US. So Stanford kind of do the work within the US. ESA is doing outside of the US. They published their first paper back then. I looked at the cover of it. There were 3 names. I found their emails, sent them an email. One of them was kind enough to get back to me. And we had an hour and a half call over Skype back then.
OG. Again, talking about OG.
Yeah, definitely the OG. And I was even further more captivated by this notion. And when we ended the call, she said, Guy, we have the first search fund conference in Barcelona. You should come. So I hang up the call and I came to back then my girlfriend, now my wife. I told her that, now spending money flying to Barcelona for this conference, I don't know. And my wife, who usually tends to be smarter than me in making in these decisions, she said, like, what are you talking about? Let's do a weekend. Let's have a weekend in Barcelona. You go to your conference. I'll go walk around. And then Saturday we'll do it. We'll spend the time together.
And eat some
That's
tapas.
it. Oh, yeah. So I did it. And then that's the first time I met with investors. I met with search fund CEOs and met with the community. Back then, just to give you numbers, so the first conference was 2015. I was in a classroom with probably 50 people. The last search fund conference that was already kind of completely sold out, we probably had over 1,000 people there.
Wow.
And if you go to the conferences in the US, it's much more than that. So today in search funds, you have probably historically we crossed 1,000 probably search funds worldwide. Investors are in the hundreds and it's growing exponentially.
But it's still a niche asset class, all things considered, right?
Yes.
Compared to venture capital, private equity, not to mention equity, right, which is humongous.
100%. It's still a niche, super fast growing, but definitely still a niche. So that was my first face-to-face interaction with search funds. I met with a couple of investors there and they asked me, why you? Why Israel? And, that was a fair question.
That's a good question.
Yeah, because eventually if you think about it, search funds, so you invest in the searcher, you give them a couple of hundreds of thousands of dollars spread across 15 average investors. Okay, so not a big check for them, which gives them the option to participate in the acquisition later on.
Which is a bit like a syndicate, right? Like it's a bit of like a syndicate, what people might be more familiar from the angel world. Is that correct? Yeah.
Yeah. So instead of me coming with a presentation about this idea that I have, so it's me coming with a presentation about this thesis I have on certain industries or certain areas in the market that I think there's an opportunity. I'm going to search in it. And then the bet is on the entrepreneur.
Yeah. And basically we're funding your day to day, your legal fees, your research, like your R&D in a way to go find.
Exactly. So the first hundreds of thousands of dollars is funding the search, which is a very modest salary for people who usually have, opportunities of working in investment banking, private equity. So instead of making 2, 3, 400K per year, they're doing during the search, you're making 100K. Office space, all the research work that you need to do in order to find these companies, travel, etc., etc. So it's supposed to help you find that one silver bullet, right? That's like usually when I explain to people, I said, because the word fund in search fund might be a bit confusing because you're not buying a portfolio. You buy one company to run with and manage for the long term. Yes. So the alternative of doing a search fund is starting a startup.
Yeah. I remember in my MBA days, which were like 20 years ago, one of the terms I heard was fundless operator for this, like fundless up. Yeah.
So fund the sponsor, that's something that is existing, but that's a bit more similar to private equity. So while in search fund, you are becoming the operator. So search fund is for people, and we're going to talk about the motivations more
Okay.
than just now, because that's a key issue. It's a key item in deciding to take that path. But the motivation for taking the search fund path is wanting to be an operator, is not wanting to be a deal maker. Fund a sponsor. So that's somebody who wants to do deal by deal. So they do a deal, they keep the CEO, and then they go to the next deal.
Yeah.
Search
But in
fund,
this case, the
you're
point is
becoming
like
the CEO.
you're a operator. Yeah. Okay. Okay.
So I met with investors. I came back with the answers, got a few yeses, got a lot of no's, because of you, because of Israel, because of whatever excuses and reasons. But two of the largest investors in search fund back then told me yes. And then I started fundraising.
Why did they tell you yes?
So because of the beautiful hair I used to have back then, probably. So back then, search funds were starting to proliferate across the world. So first of all, there is something exciting about being the first in the country. So supporting the pioneer in a country, there's something about it that today I see also when I invest in search funds that are in countries that are new to the model. There's something exciting about that, to open a new frontier. But again, I had the right background that is very similar to other search fund entrepreneurs. I had the right credentials. Israel has an interesting case. People were thinking that, we are a startup economy. People looking at Israel probably is, the economy is extremely cyclical. And when I showed them the charts that the Israeli economy throughout the 2008 crisis, throughout the sovereign debt crisis, throughout other crises,
even the last few years in many ways,
through a war, the economy stayed stable. The currency is stable.
It even got stronger. 20% to the dollar. What was it?
Thankfully, I'm not running a company anymore. So yeah, I can understand the pain, and I don't feel it on myself now. But but still, if you look at other new markets, look at Brazil, look at other markets that are the currency is much more fluctuates, much more fluctuating. So it's a different story. But the economy is super stable and constantly growing. So they were blown away by that. And the amount of SMEs we have here. So we have north of 700,000.
So people who don't know, small, medium enterprises.
Correct. SMEs or SMBs, small, medium businesses, over 700,000 of them.
In a country of 10 million also.
Exactly. And no search fund entrepreneur was before me in Israel. So obviously we have here, a greenfield. So they said yes. And then I raised the rest of the search fund capital from total of 16 investors, most of them US, some Europeans, a couple of Israelis. And I started searching and wow, it was, I came from investment banking, working with billions of dollars of transactions, the biggest companies in Israel, working with tech companies as well. This is where you see the cherry on the top of the Israeli economy. So I had the thesis around the SMEs in Israel, but then I actually started seeing those, and that was just beautiful.
So what surprised you the most? Like when you actually started looking?
The amount of quality of those businesses.
Okay.
When you think about making money, so you think about, I need to do a startup. I need to either like be a senior executive in one of the companies, or I need to invest in the stock exchange. But people are building beautiful businesses. You see businesses that one person built that is doing, security services. Another is doing consumable healthcare products, simple, like gloves and things like that. Businesses that generates for these people $1, $2, $3 million of net profit every year. And they worth at least 4, 5, 6, and sometimes times more than that, times that profit. So these people are the definition of success, but outside the glamorous, arenas that we are familiar with, high tech, financial sector, etc. And you find that there are so many of those, and you just see these entrepreneurs, with 10 fingers, they built these businesses, no VCs, no investors, no board, no, just fighting a day after another to build it.
Yeah.
Super smart guys. And I was that surprised me. The
Again,
amount
I have to
of
say,
quality.
with limited capital resources, and I think that's what people don't understand. Outside of high tech, right? Even in high tech, you have to be fair. It's not like high tech is not equally, right? Outside of high tech, outside of AI, fintech, traditional high growth sectors, you basically have a bank, so that's it. You have a bank, credit line, a bank, and that's it.
You're absolutely right. People tend to forget, but we said 700K businesses. But that SME segment also responsible for more than 50% of the business GDP in Israel. It's
Yeah.
responsible for more than 60% of the employment force in the business market. It's huge and completely neglected by the media, completely neglected. Also, we can talk about it by the government, and completely neglected by talent and sophisticated capital. So I started seeing those businesses, and I screened over 8,000 of those lists, went through lists of companies and phone calls, and I had the real privilege of meeting over 150 of them face to face. So going down south to Beersheba and Yerucham and Dimona to meet businesses, all the way north to
And for
Kiryat
people who
Shmona.
don't know, this is like off Broadway, like really off Broadway cities. Okay.
Yes, many of them, by the way, are literally on Broadway, on Rothschild in Israel.
Yeah.
But in order to find the real kind of hidden gems, you need to
You
go.
have to go to the outskirts.
So I met with those companies, and wow, there's so much.
I mean, your face is very expression. Like you have a lot of expression. Like it's like a lot of wow on your face, right? Like,
Because this is where, you like living in Israel, you open the financial newspapers, you only hear about certain sectors. But then, like, there's this thing that nobody told you about that is, wow, real businesses that are making real money, and like nobody focusing on them, which for me back then was awesome because I had no competition.
yeah.
So I spent 2 years, and eventually I found the one.
Okay, and before you move on, before we move to the dramatic moment of you meeting your bride to be, I just want to stress the fact that you said 2 years. I don't know a lot of entrepreneurs that sit on something for 2 years. I mean, there are some, right? But that's also very interesting. Like, can you talk? Like, what were you disheartened during the 2 years? Like, or just you felt like this is just the world?
So when you raise a search fund, so search funds are it's the model is well defined. It was already well defined back then. So you raise capital for a search of about 2 years, usually 2 years. Some people take it to 3 years.
Okay. So it's within the model. It's within the expectation.
It was part of the model. I knew what I'm getting
because
into.
it's very different. I mean, most, again, startup entrepreneurs, I'm not saying they don't think about an idea for a while, and sometimes it takes time, sometimes they do, but they're a lot more likely to start and fail in 2 years a few ideas than to just look for something in 2 years. And there's no VC or private equity that goes, hey, guys, wait, like I'm going to screw up my IRR. Just you wait. I'm waiting 2 years of it. Which, by the way, is not saying it's the right thing or wrong thing to do, because you're clearly looking for a great investment. It's again in my head, and like I don't know if you see how many Warren Buffett in the security analysis books I have here on that side. It sounds very much like a value investment kind of state of mentality. I'm just like waiting for my fat pitch. Like, and if there's no fat pitch, I don't swing. That's what I'm But yeah, sorry.
No, I'm saying you're 100% correct. That's exactly the story.
Yeah. But on the psychological level, were you disheartened, or like were you very like, okay, this is it, and this is just what's taking?
So after first year of not finding that business, you start thinking, like,
Okay,
am I going to find the one? Is it right for me? You have
is
a lot of.
Is she going to be blonde? Is she going to be brunette? Like, what is it going to be? Does my wife know?
That's exactly, like comparing it to dating is so like, it's right. It's so accurate, because you're looking for something that, and the definition of what you're looking is also like the model defines it. So high recurring revenue, high margins, profitable, obviously. You're looking in an industry that the trends are positive overall, capital light, so not high on capital intensity. And there are other characteristics, but these are kind of top ones.
The top one. Okay.
And it's hard. It's hard to find that one, because there's always, once you found the business, and I actually, probably 3 months into my search, I found the business that ticked all the boxes. But then when when it's too beautiful, it comes with a price.
Yeah.
So then the
And
price.
you need a reason, and you need a price, right? And willingness to sell, right? We have to add willingness to sell and a price that makes sense.
Right. So you meet with people who built these beautiful companies, and many of them say, like, I want a multiple that people are thinking that they are a high-tech company, setting themselves like 10 times my sales. They're like, all right, I'm not going to do it, but if you can find somebody to pay you that, do it. So a lot of the work that I had to do being the first is the market education, because you come to people who, when there are no buyers in the market, so people like, they think to themselves, like, I'm never going to sell this business, so I'm just running it and optimizing cash flow, taking out the cash from the business. And that's a great lifestyle to have. And then somebody like myself comes, is like, I want to buy your business. And not just I want to buy it, I want to help you retire, like leave the business. So you're not responsible for the day-to-day anymore. And it as entrepreneur, and every
No,
entrepreneur
my
knows
ego,
it.
my sense of identity was also part of it, right?
Yeah, it's absolutely correct. So you build your identity around that business. But I'm saying the promise that you're getting here. So it's not somebody just paying you for the business and you continue to run it. You're getting the opportunity of going away from the day-to-day, which really, for so many entrepreneurs, that's worth a lot of money.
Interesting.
Not having the responsibility.
I think like there's always like a big relief and a big fear of leaving. That's like something I hear a lot from entrepreneurs when they exit, when they sell a business and things like that.
So I can tell you, as somebody who's been through the journey end to end, I sold the business and I wasn't afraid, but it was a huge change. It was a big change because, first of all, the day after the transaction closed and I was starting to work with the buyer, that was we can talk about it. It was a strategic buyer backed by one of the largest private equities in the world. And I felt the weight getting off of my shoulders immediately. I was like,
wow, I didn't know it was there.
The weekends, the nights that you spend on the business, just worrying about it, going to sleep thinking about it. But like, it wasn't gone altogether. I could feel, I lost a few pounds.
Sometimes you don't feel the monkey until it's off your back. That's the.
And that was a heavy monkey.
So let's go back to the magic moment that you found the one.
That monkey, taking that off of your back, it's worth a lot of money to these entrepreneurs. Yeah. So I found this company and it ticked the boxes. And the entrepreneurs I met there, so two guys starting, they finished their military service together in one of the leading elite technological units, started a service company, and then built out of that a software company that, at some point they realized that it's not going to be like a unicorn, but that was a beautiful company called Dublo that they built with the very basic business fundamentals. Build a product that your customers love, give them a service that they would love. Just be honest, be a good person to work with, and you'll succeed.
And explain what they did, so people will not.
So Dublo it's still a software company that serves the market research space. So the clients will be Nielsen, Gallup, and others. And the way it's helping them is, so these companies, they run studies across the globe. So Gallup, for example, there's the happiness meter that is being published, which country is happier than others. So if you track the data of it, usually you go to a study by Gallup called World Poll. And Gallup are running that study across over 140 countries in parallel. And in most of these countries, they run this study face to face. So they have people that they hire in those countries. So usually agencies, and those agencies they hire surveyors that walk around and survey people.
Yeah, physically, and either like once upon pen and table, now tablets probably, and they ask them the questions one by one.
Exactly. So Dublo was in that inflection point, moving from pen and paper to tablet, and they took over that niche. And the value that Dublo was providing is not just the digitization of it, it was mostly increasing productivity and quality. So first of all, if you look at these research companies, their moneymaker is the data. So if the data is falsified, if the surveyor is sitting down in the air conditioning and filling out the surveys
and making up
exactly, the data is false. If the surveyor is not asking the question in the right way, that's a problem. And many other parameters that can impact the data, the quality of the data. Productivity. Once it's digitized, now I can manage the workforce, a huge workforce, in the most efficient way. Okay. So these are the key values that Dublo was generating for its customers. And we managed in the process of running Dublo. So we acquired it in 2019, and the two founders stayed with us for a year. And a few months after we acquired the business, and I remind you, that's face-to-face data collection software. COVID comes, and you can imagine that face-to-face interviews, it's probably not the best segment to be in when face-to-face is not allowed anymore.
It's not to take anything away from this dramatic moment. You like so many entrepreneurs that were on this podcast that said, and then COVID happened, travel, business, COVID happened, airplanes, COVID happened.
We had a board meeting, the first board meeting in Israel in February 26, 2020. I was coming back from the first kind of time off I took. I took like a short weekend in northern Italy, which was almost ground zero in Europe.
Yeah.
And I was coming back a few days before the board meeting, and my team started texting me saying, Guy, like, don't come to the office. Coming from Italy, we don't want to see you in the office. Stay at home.
Don't kill us. Don't kill us.
And I realized that that's a huge issue. So I texted my board, most of them were American, and I said, like, we can, I'm not expecting you to come to Israel because of this thing. And in February, the US, nothing happened there yet. So it was like, all right, this virus that, started in the East and now in Europe in some places, and they came over. And we had a great board meeting. We was talking about growth and how we're going to take over the market. And,
little did you know.
3 weeks after, I'm getting a phone call from my lead investor. Like, Guy, what the hell is happening? And one of the things I did when I first joined the company was putting a huge TV screen at the entrance, because our clients would process about 20 million interviews per year, which around 50,000 interviews per day.
And you literally saw, and you literally were seeing kind of a location flashing.
I wanted the team to see how their work in the office translates to so many places around the world. And you could see that happening. Suddenly testing dropped by 90%.
Wow.
Which means our revenue dropped by 90%.
Wow.
Yeah.
But
now, I like speaking to about it. I like my heart started to accelerate now.
Yeah. Wow.
So I got this phone call from the lead investor and board member. I was like, Guy, what the hell? What's happening? What are we doing? And the unique thing about COVID is that, if we had a financial crisis, if we had technical crisis, there's a playbook for that.
Yeah.
No one in the world had a playbook for virus spreading across the world.
Not since the Spanish flu, which misnamed Spanish flu, right? That was the last time.
Yeah. So I even had a 100-year-old investor to tell me about what they did back then.
Yeah.
So you have to invent the playbook. And that specific investor, Jeff, his experience and his approach was probably one of the key game changers for me throughout the journey, and specifically during that time. So, all right, what do we do? And you're the CEO, so your team looks up to you. What are you going to do? Your board looks at you. What are you going to do? So I said, all right, let's do what probably every crisis, like long-term crisis, you need to do is focus on keeping the business alive. So you focus on cash, preserving cash, and you start to focus on how do I help my customers survive this period. So the first email I sent out to the team, I said, all right, and that was, 6 months into running a company for the first time in my life. And before that, I wasn't like managing large teams, etc. So
yeah, it's baptism by fire. That's what it's called. Baptism by fire.
So I sat down and I was like, all right, what do I do? What do we focus on? And I started thinking, all right, how do I bring it down to very simple principles? What are the 3 priorities? So I sent out an email to my team saying, all right, here are our 3 priorities. Number 1, our employees, the health and well-being of our employees. Number 2, our customers, all right? Number three is taking a long-term look at Dublo, making sure that we survive this. So these were the three priorities that were leading us throughout the pandemic. And once you have these principles very clear communicated, it's very clear in every junction that you have, every decision making that you need to go through. Having these three priorities out there makes it much easier.
Because you might have to make difficult decisions, but you have a benchmark to what to make them to.
Yes. So I need to decide about the health of our employees. All right. So working from home, working from the office, for example. So how you navigate that, and while managing to run the company in a place that never, in an era that we never worked from home before.
Yeah.
Customers, how can we help them? Okay, because the first thing customers will come to you and say like, all right, I want to hold all payments because they have uncertainty as well. But you want to make sure that your business lives long beyond the pandemic.
Yeah.
So how do you manage those situations? So throughout the process, so we were focusing on helping our customers and making sure that our employees are safe. And once employees felt safe, that helped us, feeding to this second one and helping our customers, which then help us feed to the third one of making sure long-term, the company survive on a longer-term basis. So we sat down with our customers, and the first metric we started monitoring is customer calls. And we made a decision to make Dublo much more customer-centric.
In
business.
what way? What does that mean?
So that's the exact question I asked myself. What does it mean? So there is a value, there's, a big decision that you make. We're going to get through it by becoming more customer-centric. And then I'm a very analytical person. So I live through the numbers. How do we translate that to numbers? So we started looking, all right, how many customer calls is this company been making historically? And annually it was around 20 calls. And how many people from the company were involved, engaging with customer calls? Not many. Usually it was the founders and then one or two team members. And I decided that we're going to shift it. We're going to shift that number, make it much more meaningful. And we ended up the first year with over 400 calls. And that became the backbone of Dublo going forward, because that generated a culture of being more customer centric. Because when more people in the company having more calls with more customers, they know the customers better. The customers know themselves. There's higher trust. Customers are willing to spend more time with you in sharing their problems with you. And that creates that flywheel that can creates that success for the company and for the customers. That's the ultimate win-win situation that you want to be in. So we helped our customers. We were focused on helping our customers increase their usage, finding solutions for them to increase their usage. Afterwards, we had another huge issue. So a year afterwards, we had our database collapsed and got completely corrupted. So at first we thought we lost 10 years of customer data.
Oh my God.
Yeah. And this is when I learned, for the second time, the famous saying by Mike Tyson, everybody has a plan until they get punched in the face. So we got punched in the face again and again. But then there's another boxing saying from a fake boxer, but that I really love, Rocky Balboa. And he says to his son, and I think it's Rocky 5, he says, it's not on how many punches you can give. It's more about how many punches you can take and get up.
Yeah, that.
And that, this is connects us to one of the first points I discussed, like why I got what I saw when I doing investment banking. Grit, that ability, persistence.
It's so much. And I actually had a boxing metaphor discussion in this podcast with, I think, twice with other entrepreneurs. And my version of what you're saying is that, like, it's like, normal people, you get punched in the face, you go, oh my God, what happened to me? And you talk to it with your friends, and it's a thing, and it's a event. And the boxer, or in this case, an entrepreneur, gets punched in the face every day, multiple times, right? So it's not that it doesn't hurt. It's not a bug. It's a feature. This is what it means to be an entrepreneur. This is what it means to be the boxer. It's to get punched again and again in the face. And then continue anyway.
And the best entrepreneurs I met throughout the years, like they say the same thing. The investors say the same thing. I had smart entrepreneurs. I had really brilliant guys like working on these companies. But eventually, you see that persistence.
Yeah,
kind of make the long-term
I
win.
would even say the pain tolerance, the willing to endure pain when it's important, right? It doesn't promise success, mind you. I have endured pain. I can say totally like, I've endured pain and it didn't work out, but it never would have worked out in some cases if I wasn't able to endure pain. That's a fact.
And when it didn't work out, what would have happened if you were not that persistent and able to take that, if that pain would discourage you so much that you would give up entrepreneurship altogether?
Yeah.
And you didn't.
Yeah, by the way, I don't know, maybe I would have the better life doing it, right? We have to remember, it's like, here's the thing, again, and I think that's where the boxer analogy is so good. It's glamorous, but do you really wish for your children to be boxers, right? Do you really wish upon your children to be boxers? Like, it looks good. I have a lot of respect for, UFC fighters, boxers. Oh my God, that's amazing. That's like, I couldn't do it kind of mentality kind of thing. But like, I don't wish my children to be boxers or UFC fighters. I don't wish that, as much respect as I have for them, right? Because I don't really wish them to be punched in the face and risk brain damage. When I think of entrepreneurship, like you get metaphysically punched in the face, and you risk brain damage for different reasons, but still the same case.
That is so true. Anyway, so that was another punch in the mouth that we got, and the team was just phenomenal. Like, my team was just by that time, we already kind of built the vision of the company. We built the core values, and I'm happy to elaborate about that, because that one of the key takeaways of. So one of my key takeaways from my journey so far is that core values are always underestimated, and they are not getting their fair share
when they're real. When they're
not
a piece of paper and the motivation poster on the wall. When they're real.
So when I was introduced, so we implemented EOS, Entrepreneurial Operating System.
Yeah.
As far as I know, we're probably one of the first, maybe even the first companies to work according to that method in Israel. I brought it from a friend of mine who did a search fund in Spain, and others in the US who recommended. And the first implementer we took was a German one. And part of it is setting up the core values. And coming from finance, I was so cynical. And my team was also, because we are used to having these core values, on the walls and being like corporate mumbo jumbo. But then you start to learn that core values can be replaced with behavior. Instead of calling it core values, you said these are the behaviors that are non-negotiable. This is a way to start to have a meaningful impact. So we decided on 5 core values together as a leadership team, and we started implementing those every day. Yeah. So, and how do you do that? You have 3 encounters with employees, with the team. So when you hire them, when you're running the company, and when you need to let go of people, or people are living by themselves. So when you hire people, always, never, doesn't depend on the department, or I was always the last person to interview. Right. And my conversation with that person was always starting with, here are the 5 core values of Dublo. Yeah. And then asking, that was first time. Second time, during the time that the team is active in the company. And we had reviews, the regular performance reviews every 6 months. But instead of talking about your numbers, about the targets, the first thing I would start with, like, where are you compared to the company goals? The company core values, sorry. Core values. And you had plus, minus, and minus with specific examples. And then the last part on departure. And then you find the magic happens is that there is a process of self-selection when you are so clear on the core values of the company. So you find that some people, they just it doesn't fit them. So and regarding that one, here's my specific text, because I haven't implemented EOS in full, but I've read and I've implemented some parts, some of things. But in relation to, and people who don't know, there's a term called right person, right seat, right person, right seat. But I think it's one of the, if you can take one thing from the EOS process, I think it's a super tool. It's the 20% that makes 80% of the difference. It's basically, is the person the right person, and are they in the right role? Which, again, not going to the whole book and the process is basically like, are they right? It's like, do they have a skill set, and are they in the right role, both in the right function and also based on the goals, both in terms of not goals, the values of the company. Because if you are
and no asshole environment, just to be clear, and you have an amazing salesperson who makes everybody's life miserable, and you tolerate that, that is your value. That is your value. That's the value you understand. And if if you're not tolerating that, you're making sure that I am a no asshole kind of environment. And by the way, this is not to say you can be an asshole company, and that might be your value set. That's what, like, investment banking, we know, swinging dicks kind of attitude, get the deal done with everything. It's like, yeah, it works for certain companies. It's
Right.
fine again, but you make the super selection. And I think the behavior, the biggest marker of what are your values, it's what behavior you're willing to tolerate and which behavior you're not willing to tolerate across all those 3 points that you mentioned, right? That's the thing.
You're absolutely right. That's exactly, those are the behaviors that you're willing to tolerate or not willing to tolerate. And how do you encourage people to stick to those core values, to those behaviors that you decided that those are the core values that are going to lead the organization going forward. So I found those to be probably the biggest takeaway that I'm taking from that time. They say, people say, like, one of the key elements for success, like, hire slow, fire fast. I agree with the first part, but I kind of developed the second part. So you can fire fast for values, fire slow for performance. So if the person has all the core values and is not performing well, this is where you need to apply coaching. If that person is coachable, and try to help that person. But even if that person is a high performer, but very low on core values.
Yeah, that's not a question. Yeah, and by the way, it took me time to get there. What you're saying, like, you probably got to it faster because you went through this process, but it took me time. It took me time to get there personally on that one. And I would add, and again, this is my personal take on that thing of the coachable part. I think it's a bit more nuanced. I think what I've learned there, it's like, there's a lot of, and again, the nuance of what I'm going to say depends, like where the person is, individual contributor, maker, creator, manager, like, of course, but just like, does he, like, is he doing the work, right? Like, is he performing well? Okay. Does he know what performance well is? Yes, no. Right? Because this actually becomes nuanced, because it's like, is he performing? Okay. Yes, no. Does he even know, are you guys aligned, and what's good, or what's good? What's the objective? What good is, right? What excellent is? And then it's like, and so on. And when you start going down the line, you actually it was like breakdown of like even 5 elements before you even get to coaching to actually understand what it is. Because sometimes people think they're doing well on something that, like, they believe is the right thing, and they're executing to performance to something that you're not aligned with. Right? You're not aligned with. Anyway, sorry, that's my rant.
No, you're absolutely right, because again, like, if you've been an entrepreneur you built a business, you hired a team, that, you feel that.
Yeah.
And in many times, like when a company is in a hyper growth stage, so we're talking about startups, in many cases, you need to fill in the spaces. And many times this is where culture kind of goes away. You're taking, people might lose their culture over the pressure of hiring and focusing on the business performance. That could be a problem. So anyway,
you got punched multiple times in the face. You bled. You learned. You had amazing team, but hold up, you learned the importance of EOS and culture. What's next?
So really, like, this is where core values really shine during these processes, during these crises. This is where the team was just like showing up at their best. And after we came out of COVID, so this is where I was sitting down. I was like, all right, do I want to run this business? I was so exhausted. I was so beat up by that period. I'm talking about 2.5 years of running the business in emergency mode. And I was like, all right, do I want to sell it and continue to the next thing? And then I spoke to a couple of entrepreneurs who have been running their business for a long term. And they said, like, guy, try to see if there's a long-term opportunity here for you. This is where I started sitting down and building the long-term strategy for the business. I thought, is Dublo 10 years from today could be interesting for me? The answer was yes. And I saw the team that I managed to build throughout the first years. I was like, all right, this is a team I can go to war with. And we started to have that machine that's happening when you hire. I remember one of my senior executives came to me in, I think it was 2022, end of 22. It's like, guy, the team here is just like, we work so well together. so much fun to come to the office. And, and we didn't spend more money on hiring. We didn't change anything material in the business. And I told him, these are the core values. Once you have alignment on core values, that's what creates that sense of a team that works together, because that increases trust, and trust is the, foundation for every success in teams. So we built a long-term strategy, and then October 23, all of us in Israel experienced that one way or another. And then for us, besides the personal impact, my board was just tired of this. And we took the decision that we are selling the company.
Your board were mostly people outside of Israel?
Mostly Americans, correct.
Is it a cultural thing? Because I don't know. I know maybe as people who operate in Israel, you just get used to, I don't know, this kind of hardship. I mean, it's far from easy, right? Extremely far from easy. But we talked about being part of the faith. But it's like...
I think that October 7th, so until then, we had every couple of years, we had like a war with Gaza or something like that. But October 7th really changed something more fundamental. And I feel like for my board, that was, the last punch in the mouth that we could take. Luckily, we managed to build the business by then, to put it on a growth trajectory with long-term strategy. And we managed to build that growth beyond where we were when we bought the business. So we decided we're selling the business, and we went out on a process, and we managed at the beginning eventually of 2025. So we sold it to a company that is a portfolio company of TA Associates, one of the largest private equities in the world, and was a great partner to have. And I managed to make sure that my team is getting well treated by them. And so we closed the deal in January of last year. I finished my duties in the transition period in August. So that was the end of my time in Dublo.
So what's, before I ask you for personal questions about that. So, here's what I heard. When buying for the search fund, you wait for a fat pitch, you wait for the perfect ride. And that was the biggest learning point. And for running the business, the team, having processes, having the core values in place, having a long-term plan, kind of like the key learnings. But we kind of glazed over the sale. It's like what would you say? Well, because it's in this part of the business cycle, what's your core learnings from the selling of the company?
First of all, it's very important who you're selling it to.
In what way?
So if you only care about the financial outcome of it, so you can sell it to whoever the highest bidder. But it was important for me to make sure that the team is being treated fairly, that our customers are being treated fairly, that there is something that could be bigger than just Dublo. And that's why we chose eventually the buyer that eventually bought us. And the dynamic throughout the sale process, the negotiations could be very energy consuming effort.
It is.
So the discussions were so positive, and I spoke to people from the other side. I was like, all right, these are the people that I want to take Dublo to the next step. So that one. Number two, if you build it right, that there's the saying, if you build it, they will come. It's so true also in business.
What does building right mean?
So first of all, you build a machine, you build highly performing machines, people who are, first of all, the people. So the team, the core values, everything we spoke about. So our core values we had 5 core values. We had accountability, we had commitment, we had customer-centric, can-do approach. And so I said commitment, accountability, customer-centric, can-do approach, and forgot number 5.
You can see you exited the business. It's been a minute, yeah. A hard minute.
So, but I got a phone call a couple of months after I left from the woman who took over my role with Dublo. And she said, Guy, your team is by far, the best team that we acquired under the company that is 20 times bigger than us. It's the best execution team that we have in this under the company. I told her, why? Why would you say that? What makes them like this? They are accountable. They're committed. They're super customer centric.
And you went, hey, this is that kind of... So
I was like, yes, they are. That was when the kindergarten teacher calls you to say, your kid is the genius of the kindergarten.
Yeah. I mean, you're proud. You look proud.
Yes. So that was the biggest moment. And I was just blown away by that. And so when you ask, what's the key takeaway? That's why I said core values. They work when you run the business, but they also makes the business attractive for somebody to buy, and the relationships that we built with our customers and the promise eventually, as as somebody who's selling the business, you want the buyer to be successful. You don't want to sell them, an asset that is crashing and burning.
Yeah.
You want them to be successful. I want them to make a huge outcome of this purchase, of this acquisition. So I think that once you build it this way, it's set for the right buyer to.
And I mean, we talked about the monkey that you felt that got off your back. Was there anything else that you felt changed fundamentally once you sold?
Yeah. So, I would come back home. I'll be home. So
who are you again? Who are you?
So my kids, my kids used to ask my wife, like, when is Uncle Guy coming again? Yeah. So, spending time with my family, doing things that I completely neglected, sports. I went to do, started building my bucket list again. I went to climb Mountain Kilimanjaro and did so many things spending time with friends that I completely neglected throughout these years.
Yeah.
Learning, reading books, just reading a book that is not a business book.
Shocking.
Fixing my health, fixing my sleep, all these things, spending time with my parents, my siblings. So all of that. So that was my, personal side. But on the professional side, so the search fund, and we can call it the ETA because there are different models falling under it. Entrepreneurship through acquisition. Search fund is one way of it. But the ETA community was so generous to me. I mentioned one of my board members. But I had 4 board members. With 2 of them, we became best friends, and have been just priceless. And we became, they are with me today. We still talk every month. With one of them, I have a call every other week that we started before I bought the business. And this is the person who manages hundreds of millions of dollars fund. He's on a board of so many companies, and we still every other week we have that call.
Yeah.
And today is just like, talking about personal stuff, and not just we're not in Dublo anymore. So the community was so generous to me, other searchers, other investors, CEOs, and I wanted to give back. So I spent a lot of my time doing more informal work. I took coming out of the search kind of cycle. So I was invited last year at the London Business School Search Fund Conference to give the keynote speaking, to be the keynote speaker, the closing keynote. And that was fascinating, but it also creates more people are coming to you, aspiring searchers, young CEO coming to you. And I took the decision to say yes to every approach. So every reach out to me, I said, yes, I'll take that call. I'll take that meeting to try to be as helpful as I can and trying to give back. So that's an informal. Today I'm helping whoever wants, then I can, I'm helping. Also in maybe somewhere in between, I took that role of being a teacher in Reichman University, teaching the first ETA course together with a co-teacher who was a successful searcher who made Aliyah from the US. So we teach that. And then on the more formal way, so being an investor, so I'm investing in search funds internationally, but also my key focus is on Israel, and we can talk about it in a minute. And this is where I invest, but I'm investing selectively in places where I think I can add value. So either I can be an advisor to the CEO or a board member. So I took a couple of board seats. One of them is in a company in Brazil, a software company in Brazil. The entrepreneur is super impressive, and I wanted to work with him, and he showed the interest of wanted to bring me on board, and we shared a lot of common investors. So that worked out. And be an advisor, paid or unpaid, to CEOs and searchers who are kind of throughout their journey. So that's what I did since then on kind of more formal side of things. But yeah, I took about 6 months of time off. That's the biggest probably tip that I can give, advice I can give to somebody who exiting. The only commitment you take is for amount of time that you're not committing to anything. So I invested, I helped searchers, etc. But I took the commitment of not taking a full-time commitment.
Yeah.
And these 6 months are over. And what I'm doing now is 2 things. So first of all, I would be super happy to operate again. So I'm in the market and looking for companies. I'm meeting with business owners who are ready for the next chapter of their business, and they care about the transition. They care about their legacy. They care about who's taking over their business. So that's
Yeah.
one thing that I'm doing. The other thing that I'm doing, and I think that gets me even more excited. So let's go back to the numbers that I mentioned before. The SME segment in Israel, over 700,000 companies, over 50% of the business GDP in Israel, over 60% of the employment in the business segment in Israel are in this area. And this segment has so many issues today. So on the good side, it's filled with super talented entrepreneurs who build these companies without any help. But what are they lacking? They are lacking access to talent. Where is that talent today? It's going to high tech, it's going to the finance, you go to private equity, investment banking, others.
Yeah.
They lack the access to smart capital. So people are not just giving you money to own your business, but they actually can add value. They've seen this thing happening multiple times, and they lack the access to success stories from other places around the world. So if I'm building, for example, leave the software aside, but if I'm building a service company, all right, so let's think about MSPs, so IT service companies. All right. I'm building one now, or I built one, and an investor coming in and trying to help me, want to invest in my business.
And this is what worked for them. Yeah, that was a key thing. This, key hires, key models, business models, clientele, market segmentation, pricing.
Because I have that network, so the investors who invested in them, the entrepreneurs who did it, will be more than happy to talk to you and share their experiences. That's worth a lot of money to these people. So if I look at that segment, so it's appealing because nobody's in it today. And the trend that is just starting today. So I was probably the first one to look at, I called it Search Fund, but it's basically bringing entrepreneurs who came from other places who could do other things into the SME market in Israel and support them. So I was lucky to have these investors supporting me and this community of CEOs and investors who've been through that journey and could help me. So I was the first one. But since then, there were other entrepreneurs. So they are coming like in small scale now. What are they missing? So they're missing, first of all, local investors to help them. They're missing that smart capital. They're missing, how do I buy and grow IT service businesses?
Yeah.
And they are missing eventually the investment structure and the governance that will make other investors from abroad and other places to come in and join that journey. So in an ideal world, and this is the world that I'm working on building today, the SME is enjoying. You see a lot of entrepreneurs who are considering doing startups, going and buying and building SME businesses. They bring in all the talent from the tech world and the finance world. They bring it into the SME. Together with them, they have smart capital. So they have smart investors who've been in those situations. They can give them access to capital, but they can give them access to experience and know. So all these together will make the SME segment in Israel as productive and as successful as we see the high tech. I want to make SMEs the new high tech.
It's a noble goal. It's a very noble goal. There's the things of that.
Thank you. I agree. There's, the way I look at it is trying to make Israel stronger through the SME, one company at a time. And, that's like Zionism for me, part of it. It's like you see that opportunity, you see that talent, you see these businesses, you just have to do it. So today I'm spending a lot of my time interacting with entrepreneurs, potential entrepreneurs who are considering it. So trying to work with entrepreneurs to invest in them on one hand, but then also to support them and help them build those deals and long-term visions together with them. So that's most of my time is going on today. And I have partners that are doing it with me. And obviously a lot of the investors that invested with me on my deal are looking into this, etc. So we're building an ecosystem here that will serve these entrepreneurs, that in turn will serve the SME, that in turn will serve the Israeli economy.
Amazing. Guy, it's been quite a journey, this talk. And I think this is a very high note, but it's a great place to kind of wrap things up. For people who want to reach you, where can they find you?
LinkedIn, I'm available I can share my email at the end of the call, the show notes. Yeah, reach out.
Spell out your email. So because the people
Guy, GUY dot SLMN, Solomon without the O's, at gmail.com. So that's my email. Or you can reach out to Guy at trailmarkpartners.com. And if you're an entrepreneur who is considering doing a startup or just doing other way of entrepreneurship and want to learn more about the opportunities in the SME market, and if you're a business owner who is thinking about the next chapter of their business, to their me.
amazing. Guy, it's been fascinating
Thank you.
and fun. Thank you very much.
Thank you for the opportunity, Hagai. I'm a huge fan of your podcast and a huge fan of you.
Thank you. Flattery will get you everything. Everything.
Thank you so much for hosting me here, Hagai. It was a pleasure.
Cheers again.
It's a wrap. This Ageas podcast episode ends here, but you don't. Now, is it crazy to think that you know somebody who'd love this episode? Share it with them, and they'll love you for it.